Hey guys, good morning. RB here. Um, just want to update you guys on the different options that we have, for the next week and how I see the price can unfold in different ways, right? Last week we were talking about a possibility after the sell-off up that happened on Thursday that, we might still see our 6,200 range or a little bit below that to just sweep the liquidity below these levels, right? But again, Friday there was a massive move up towards 6,400, and that's where I was looking at 6,300 to 6,400 as a chop range, and not really uh, get trying to get into the trade at that point of time until we have a very clear indication on what's really happening. And potential, for the whole day Friday, the price was not really able to get even close to 6,400 now, but we saw some action after hours, which made it close at 6,400 right now. Getting into the next week, we have CPI, PPI, and other events that may help the price move in one direction or the other. But going back to the different options that we had, while last week was a little, between just two options, either go to 6,200 or break out from 6,400, I am kind of looking at a third option as well. So, since the price is trading towards the 6,400 or the higher range at this point of time, can it be still a B wave? Yes, B waves unfold in a very different ways, and if there is an sell off, yeah, it can come to 6,200, but I'm keeping this option as a third option for now, or my least priority on the bearish side. But between the bullish, which is a breakout above this, and a bearish option to keep in mind for a dip buy, and with bearish I do not mean shorts, right? I'm looking at a dip buy, right? Um, the option that I was looking at for that was that what if this whole move turns out to be a leading diagonal wedge, which is you have wave 1, 2, 3, 4, and a 5 sweep above the highs, and then you get a pullback back again, right? Come back to this 6,285, 6,286 area somewhere here, right? Sweep below and then start the rally to the upside, right? So good to go towards 6,500, 6,600, and so right. So this is one where I think, and if I look into the US 100, this can potentially unfold, as a bearish option or as a dip buy, for us. So if you see it here, 1, 2, 3, 4, 5, sweep above, come back either here or lower into this level before going higher, right? So this is a bearish option which I'm keeping in the mind. And of course, price will tell us more whether it comes just here or here. And we can look into that. But this is an kind of, when it comes between coming all the way down and just sweeping below. I think this makes a lot of sense as well, and we'll keep this as in mind if and when that happens, right? So this is more of the bearish side. But now, when we are looking into a bullish, let's say it does not happen, there is no dip, and we have a breakout, and we have to chase into the longs, right? Now, when we talk about chasing into the longs, we are saying that we this was our wave one, uh, and two, and now this is a three ongoing. So if there's a three ongoing, there is a very specific action that I want to see, and I want to see it on a larger time frame. So the typical mistake which happens during the breakout is that we get into a smaller time frame as 15 minutes, 30 minutes, and start looking at the candles. Oh yeah, this is breaking out. Let's get in. What happens? Um let's say even you go into a 15 minutes chart. So what probably can happen, let's say this was my one two, a breakout happened for a four, a wave here, which is still a fifth wave of leading diagonal. You get a small job bull, and the price goes higher once more for the last test of the liquidity, or grabbing the liquidity, and it just pulls back sharply back inside, right? So what it is, it's still the same bearish option which I explained, like 1, 2, 3, 4, and 5. And this is just the fifth leg completing, right? So that can take some time. On a 15 minutes, you might say, oh, this is a breakout, a retest, and the price is moving higher. But what happens? A red candle comes either after hours or cash hours, and it just goes below, right? So what you would want to see, if you want to see and not get trapped into any of this false breakout and breakdown scenario, false breakout scenario, right? What you want to see is you want to stay on a higher time frame, as let's say 4 hours. What you want to see is a big candle here, making it a big fair value of those, which basically pushes the price with a thrust and creates a fair value gap. And a fair value gap is basically the body of the candle. So it's a combination of three candles where the wick of the first and the third candle, the higher wick of the first and the lower wick of the third candle, does not overlap, which means there is an open body in the second candle in between, right? So when that happens in a breakout area on a larger time frame and it does not close us, that tells us that bear bulls have full control, they're not going to fail. So any kind of pullback, though some consolidation can happen here, it should not close that 4 hour fair value gap which gets created, right? So that's most important part. And once this 4 hour fair value gap gets created, you can then come back to the lower time frame as 15 minutes, see the bull flag forming here, and when you start getting an upthrust again, and that 15 minutes start forming the fair value gaps again towards the upside on a shorter time frame, that tells you that this bull flag is breaking to the upside and we are not gonna fail on this one. On the other hand, like I was explaining, that the breakout happens, you might get a fair value gap while the breakout is happening, but what you don't want to see is another candle closing that one up, and that would be your red candle. That kind of makes it as a liquidity draw, and bears or the sellers have come back in. That was just to trap the breakout buyers. The stops have been hit for the shorts. The breakout buyers have been entrapped, and the price is just going lower to test the liquidity in the lower areas to trap the bears back again into these areas, right? So it'll come down here, bounce a little bit, come down here again, and then go up, right? So that's the price action difference that you would want to see for between a successful breakout and a false breakout, if this is actually going into the wave three up, getting into the next week, right? So hope this helps to understand the plan below in the post, and uh, you know it'll help you to kind of understand which scenario probably we will be in, and I'll be updating in the commentary anyway. So yeah, that's about it. And like always, if you like this content, please do like and share and subscribe to my YouTube channel as well. Thank you very much. Have a good one. Bye bye.